Hello and welcome to Thinkpod, powered by the FII Institute. I'm your host, Mark Barton, and for over 2 decades, I've been at the forefront of global conversations on the issues that matter the most. In this series, I'll be meeting the leaders who are rising to tackle the grand challenges that face humanity right now. Together, we'll be discussing the radical ideas and the transformative solutions that'll benefit both people and planet. This episode, I'm joined by Roxana Mohammadian Molina, Chief Strategy Officer at Blend Network, a peer-to-peer lending platform that aims to tackle the UK's affordable housing crisis. We explore her transition from the City of London to a radical FinTech startup and why we need to normalize the conversation around women investing. Roxana, thank you very much for joining us today.
Thank you so much, Mark.
You've written about the COVID pandemic. You've written how it's wreaked economic carnage across the world and how this carnage has been uneven and particularly hitting those in need in emerging markets. How, Roxana, do we set things right?
I think exactly the word that you mentioned, uneven, is really the best word to describe the situation that we have seen during COVID, not only across emerging markets versus developed economies, but also across sectors. There have been so many sectors that have been really deeply affected and others that, such as we'll talk later, I'm sure, tech and FinTech that have benefited. So uneven is really the right word to describe the situation. Innovation, I think, has been a great beneficiary of the situation that we have seen in sectors such as FinTech. We've seen the amount of innovation in 2 years is the amount of innovation that probably in the past we would have seen in a decade.
Why is that? How can that happen in COVID, given we are all in sort of siloed away?
Changes in lifestyle, suddenly we all had to shop online, and so we have seen a great boom in payment, technologies and the development of payment companies. So it was the need really that pushed us to push the boundaries, which I think is a great quality of the human behavior. The need to, when there's a need, you become creative and you create those opportunities.
So does FinTech have a big role to play in the recovery? As you've stipulated, FinTech has weathered the last 2 years well. In fact, it's thrived. We've seen this wonderful innovation. What role does it have to play in the recovery then?
I think it has a great role to play in the recovery, but not only in the usual areas that we often think about, such as payments, which obviously for the UK and for Saudi are big sectors, payment technologies, but also in sectors such as wealth technologies. I think suddenly a lot of people, they have realized that it is important to invest and to have your different sources of income and to be able to have your investments. So wealth tech companies have done very well, and it's kind of democratizing as well the wealth management the sector. So suddenly, people have realized that they are able to start investing with small amounts and create for the future. So I think wealth tech is one of the sectors that has particularly benefited and has a great prospect.
Let's talk about Blend Network, your peer-to-peer lending platform, where your Chief Strategy Officer. First, explain to our listeners and viewers, where's the value in peer-to-peer investments?
In order to answer that question, I think it's good to go one step back in history and go back to actually the global financial crisis in 2008. Before 2008, large financial institutions, they were lending to SMEs, to property developers, to small companies. But then suddenly they reduced their appetite for SME lending. So suddenly overnight, there were a big part of the market, SMEs, entrepreneurs, innovators, and in our case, the market we serve, property developers, that they were left without funding. So over the past decade and the years that follow, we saw the emergence of peer-to-peer and specialist lending to serve that part of the market that had been left out by the traditional financial institutions. So in our case, we focus on funding SME property developers and particularly those who are building affordable, ESG compliant and energy efficient homes. A typical customer for us would be a small developer who is building 10 homes, 15 homes, and those are too small for the large financial institutions. They are not able to get funding easily. So I think the value is really in serving a segment of the market that is underserved, and especially if you go outside, in our case, outside London, across the regions, small towns, small villages where there is so much demand for affordable housing, but those small developers, they are not able to get funding for their projects.
So the housing shortage, tackling it, that seems to be your core mission at Blend. Just for our international viewers and our listeners who aren't so well versed in the sort of minutiae of the UK property market, just describe the housing situation in the UK. Clearly there's a lack of housing supply. Clearly that influences and that impacts ordinary working people in the UK. Just paint the picture so everybody understands.
So I would say the UK housing market is a two-speed road. Most of the international, viewers will know the central London market and which has been buoyant. But at the same time, you have a regional market that is really driven by supply and demand. The central London market is driven obviously by the international, investors. But the regional market is purely supply and demand. And there has always traditionally been a lack of supply in the UK housing market.
Why is that?
Not enough lenders, basically, in the market, and not enough investments. And it's always, the financial side and getting the funding in place has always been a challenge. Of course, there are other reasons such as the planning as well and the land issues. But there's a structural lack of housing. And really that has driven demand. I mean, in the past, since the pandemic, the average house price has increased by 12%, which is really something
It almost doesn't make
incredible.
sense, does it? How does the UK resolve then this lack of housing?
One of the things that we have been really advocating is get the specialist lenders on board, because at a time where there is so much pressure on public finances and funding is a big problem, specialist lenders can really be a key ally in this fight against the housing crisis, because specialist lenders have capital to deploy and have the appetite to deploy. So really they can be and they must be part of the solution to the housing crisis at a time when there's not enough money to build houses.
So when we hear about traditional banking versus FinTech, it's not necessarily true. You do have partnerships with banks. They pass on business to you?
It is a very good point what you mentioned, because we are seeing more partnerships and competitions. I give you an example. There was a few years ago in 2018 a scheme set up by the government called the Bank Referral Scheme. And the scheme is about when someone goes to a traditional lender, a bank, to ask for a loan, if the bank is unable to fund it, then they have to refer them to an alternative finance provider. And so under that scheme, we and many other specialist lenders are working with the traditional banks to fund those borrowers who are not able to borrow from the traditional banks. And it is working very well. So it is really a great partnership and an example of many partnerships that we have.
What other examples are there, Roxana, of niche lending opportunities? Paint the picture of what those exactly are.
I think nowadays ESG and green finance is really a very important topic, because it is so much demand from the government, but also from property developers who are really want to focus on housing schemes that are ESG compliant, they are energy efficient, and they really good living places for the communities.
Are all your investments ESG compliant?
We have a green product, but our investments are either ESG compliant and energy efficient homes or affordable housing schemes.
Right, so it does tick the boxes. Have banks left that area of the market for good, or are they still dipping their toes in those sort of underserved markets?
You have had the emergence of some challenger banks and some specialist banks covering those markets, but they focus on the larger developers. So I would say 10 million plus. But if you are a very small developer looking to build 2-3 houses in a village, those are the underserved.
And if you're an investor, what's the opportunity of lending money, and what sort of rates of return can you expect?
So what we have seen is a big demand from kind of institutional investors and family offices, because some family offices, if they are very big, they will have their own origination, arm, and they have an appetite for debt. This is a debt product. But if not, they are using platforms like ours as an origination vehicle. So the opportunity is a debt product that is secure against property. The returns are normally 8 to 10%. And obviously in an inflationary environment, people are looking to diversify. Going back to COVID situation, at the height of COVID, taking except, the March and April period at the height of COVID, after that we really saw an increase in demand from investors for investing in these products, because even then, inflationary pressures and fears started to emerge.
An 8 to 10% return. I mean, it's
yes.
Even in an inflationary environment, that's still sizable, isn't it?
Mm-hmm. And they are looking for diversification of their portfolios away from traditional equities.
Let's talk about Northern Ireland. You opened this new office there. You're wanting to deploy £120 million in committed capital to SME property developers. What does Northern Ireland offer for you? Why Northern Ireland?
When we started the business at the beginning in 2018, we did a lot of business in Northern Ireland, up to 60-70% of our annual business. It was a really great opportunity because the story about what I mentioned after 2008, 2009, Northern Ireland was particularly bad hit by the financial crisis, and many lenders, they just left the market and they haven't gone back. So there are very few lenders, especially development finance lender in Northern Ireland, but the property market has been really booming. In fact, last quarter it was the strongest of the UK, and last year was the second strongest in the UK. It's a place where you have a lot of startups, you have a lot of entrepreneurs and people who want to get on the housing ladder, but there is a lack of supply of housing. So big demand for housing, not many lenders,
yes.
And therefore, not many people building houses. So it is a niche opportunity in that sense that we saw in that.
Are there any other niche opportunities in the UK and maybe outside the UK where you might venture?
Yes, we only focus in the UK. At the moment, with the government's agenda to level up, I would say that the north of the UK represents a very good opportunity, places such as Manchester and Newcastle, because you see even, government offices, companies moving their headquarters there. Obviously, the cost of housing compared to London is less severe, so it is good also for employees. So we see those areas growing very rapidly.
How's the business backdrop? I was looking at your Twitter account a little bit earlier, and I learned a lovely stat. The UK tech ecosystem is worth $1 trillion a year. Put that in perspective for us.
Actually, the FinTech is the biggest part of
Yes.
that tech ecosystem. Really, I mean, we have seen, big unicorns coming out of the UK. Not only the big ones such as Revolut, but a lot also in the payment system, payment and wealth.
Are you a future unicorn?
You never know, hopefully. But FinTech is the biggest part of the UK tech ecosystem with high-profile unicorns. And in terms of the investment that these are receiving, more than Germany and France together last year in terms of investment into the UK FinTech sector. So in terms of global perspective, only US, China, and UK are, have an industry worth over $1 trillion.
How about the Saudi Arabian FinTech scene? I mention this because you recently joined the board of the Saudi-British Joint Business Council. How vibrant is the FinTech sector in Saudi Arabia?
I think you mentioned the right word. Vibrant is
Yes.
really the word that we are seeing in Saudi Arabia. We are seeing a big change in the scene, in the sense that in the past we had many really great FinTech companies coming out of being born in Saudi Arabia, but moving outside when they wanted to grow and scale. But that trend is now reversing. And we are seeing Saudi-born and bred FinTech companies stay in Saudi Arabia and scale in Saudi Arabia. A lot of money is being put into those companies, and we are already seeing some really success stories. One actually I was seeing the other day is the Saudi peer-to-peer called Lendo, and I think the sandbox that Sama put in place in 2019 has been also a great success. We've already seen FinTech companies going through the sandbox and kind of graduating and launching, and so it is a very vibrant.
And what's the UK Saudi tech hub?
So obviously UK being a FinTech hub and having achieved great success, and with Saudi as well, we thought that it would be a great place to connect the dots and to connect a lot of the initiatives, connect entrepreneurs, connect investors, but also the academia, and learn from each other. For example, I think in the UK regulator, the FCA, has done a great job in regulating the industry and creating trust in the sector. So there's a lot of lessons to be learned learned as Saudi Arabia grows its own ecosystem. So the Saudi UK Tech Hub is a platform for connecting, for learning, and for just amplifying a lot of the initiatives that are already taking place.
Is there anything else that the Saudi Arabian government can do to create an environment that's even more supportive of fintech?
I think regulation is the key here. In order for any ecosystem to succeed, it has to be well regulated in order to create trust in the system. And that's what the UK really has got right. The FCA, they did a great job, created a lot of trust, and that's also why we saw a lot of investment coming into the UK. So I think the lessons for Saudi Arabia would be to really get the regulation side of it right.
Clearly the UK is more advanced when it comes to regulation, but what more would you ask from the government when it comes to helping innovation and drive forward the fintech sector in the UK?
The sandbox has been very good in order to create an environment where companies can test new ideas before launching to the market. So more momentum on the sandbox, I think, would be very good. And a few weeks ago, it was also announced at the UK FinTech Week that stable coins are going to be regulated, which I think that would be a very positive move also for the market.
Especially given what's happened recently with Terra and UST. Are you a big crypto enthusiast?
I still need to learn a lot more about the market, but I think definitely it has, I see the positive side of it, but as well also the risks of it. So that's why I think that regulation is very important. And I think that the governments are taking the right steps to focus on the positives, but in a regulated environment.
Yeah, you're an entrepreneur. Obviously, you're focusing all your attention on Blend Network, but you set up a business, you successfully exited it. This was Zeba, which was called the Uber of Beauty. This was back in 2016. What's your advice to young entrepreneurs?
My advice would be to learn how to fail, because I think this is something that we often don't really learn a lot, because we live in a world that all the focus is on success.
Yes.
We see the success on social media. We always see everyone's success, but we don't know that behind that success there's a lot of hard work and there's many, many failures that we don't see.
Let's talk about women and women investing. It's fascinating because according to a recent survey by YouGov, over half of women have never owned any investment products and only 1 in 5 hold an investment. So you've talked about this need to normalize the conversation around women investing. Can you explain what that means?
Yes, as you said, women, they tend to save money and they have the cash at the bank, but they don't really tend to invest. And this is, I think, a very sad statistic, because you are simply missing out on the opportunity, on the return on the investment. So I think this is something that I'm personally very passionate about changing, because I think as part of our road to financial independence, we need to be able to talk freely and confidently about investing in the same way as men, talk about investing and discuss their financial ambitions. I think being open to discussing our financial ambitions is very important, and not being seen as something negative that we have to shy away from.
And how can we encourage young women to pursue a career in technology?
I think that's a great point. And one of the initiatives that I love, that I am involved in, is Innovate Finance FinTech in Schools program. So the idea is to go back to the root of the problem, which is why women are not being trained, not applying for these tech and fintech jobs. And so the FinTech in School program is about going to schools and teaching children and girls about what does a career in tech and in fintech look like, what are the opportunities. So really educating children about what is tech and fintech, which I think is a great initiative.
Let's finish with your motto. You don't ask, you don't get. Have you learned that the hard way?
Yes, 100%. This is so important for me, because often people complain that, I'm not getting this, I'm not getting that. But the question, did you really ask for what you wanted? So for me, it has been a lesson through all my life, all my career. If you want something, ask for it.
Yeah. Give us an example where maybe you were a little bit sheepish and you were scared and you didn't want to ask, but you asked and this enormous door opened.
Well, I mean, the clear examples are the promotions and the salary negotiations situations back when I was in Morgan Stanley in banking.
Yeah.
So.
How did you make that pivot, by the way? I'm glad you brought up, Morgan Stanley. You were vice president of commodities. You were there for almost a decade, right? How did you make that pivot, and why did you make that pivot from working in the city to entrepreneurship?
I always wanted to do something entrepreneurial, and I thought that starting my career in investment banking would be a great place to start, to learn, to develop a great network. For me, it worked very well to start in a big company where you can really learn a lot. But in the long term, I always wanted to be an entrepreneur. And FinTech is really exciting. When I left Morgan Stanley, it was really starting to become very exciting. And I wanted to be part of the FinTech story.
Could you go back to a big blue chip bank, or you've left that now? You love this sort of startup, peer-to-peer space, being an entrepreneur?
Both big companies and small companies, they have positives and they have negatives. But I at the moment, I really like the challenge and the dynamic environment of the small startup organizations.
Roxana, it's been an absolute thrill.
Thank you so much, Mark. Thank you.
Thank you. In these turbulent times, don't forget to like, comment, share, and subscribe to ThinkPod for more insight and analysis.